Good day, fellow investors. Prosus, Tencent, Naspers is out, but the discount is still there. And as value investors, if there is a discount, there is value, we look into it. So let's immediately explain the discount. If you look at Prosus, which is traded on the Amsterdam Stock Exchange and Johannesburg Stock Exchange now, you see that the stock price is 27.76 euros. But if you compare that to the net asset value, which is 80% made of Tencent, then you see that the net asset value is 45.8 euros, which means there is a 40% sale. And if our spouses see that, they say, oh, you make money when you buy something on sale. Actually, here it could be really the case. Now, I have been covering Prosus Tencent on my research platform for a while now. We have Prosus, we have Tencent, and it's time for an update. If you want to check other coverages, feel free to check my stock market research platform. There is a 21-day money-back guarantee if you're interested in what I own and deeper analysis on many stocks and coverage over time. One part of that coverage is also the calculation of Prosus's market capitalization, how and where, and for that, as data providers didn't do a good job there, I contacted investor relations, and if you can pause this or take a snapshot, you can read my email. What is the number of outstanding Prosus shares, which is now already lower, and multiplied by 2 because they made a stock split that we'll discuss in a second. But for now, things should be simpler than those were back in the days. Anyway, if we go to the website Prosus, this is the number of shares outstanding now as they finalized the Prosus capitalization issue, where Naspers became Prosus, and the situation there finally became very simple. We have Prosus, Naspers that owns now clearly Prosus, and Prosus public shareholders, where Prosus then owns the stake in Tencent and other stakes, because this was the previous mess, really a mess, and in the process of trying to unlock that value, they have made things clearer now. However, there is still the big discount, and the discount has been there for the last decade, since I've been listening to Tencent, Naspers, then listing Prosus on the Dutch Stock Exchange. They've been trying to close that discount in many ways, but for now it is still there. If we check Bloomberg over the first 6 months of 2022, the discount goes up and down, and if I look at it now, it is 40%, and they are trying to close that discount. Now the focus is to sell Tencent shares on the market and do buybacks, because you sell something for $1, you buy back the same for 60 cents, and you should be closing the discount. And you can see here how they have been selling the ownership percentage in Tencent, getting money, and with that money lowering the number of shares outstanding in Prosus, because if you check here, this is now 1.3 million, as I shown you in the email that was sent 2 years ago. It was 1.47 million. So they lowered by more than 10% the number of shares outstanding by selling Tencent, buying Prosus, and increasing the net asset value per share. But anyway, there is the discount, and the question is, okay, when will the discount close? There have been these holding discounts. You can find them anywhere. Sometimes the company owned is even more valuable than the company that owns it. Just been researching something, writing up, and that's also possible. Of course, it's very difficult to sell it yourself. They, as companies, need to do that. And there is always something, some incentives, can be by the management, can be this, can be that, and the market simply also takes time, so there is always this holding discount present. It can be bigger, can be smaller. However, it's not just about the discount. When it comes to investing in Prosus, you also have to ask yourself the question, do I want to own Tencent? I think that's first and foremost what we must answer. And then, yes, if you want to own Tencent at a discount, then you can consider Prosus. So, just to look a little bit what's going on with Tencent now, second quarter results presentation, numbers are up 11%, things have been recovering there, gross profit is also up, huge gross profit, great business. When you have gross profits around 50%, then you know it is a good business. Also net profit very high compared to the revenues. So that means it is a good business, cash flow producing. And when you think of Tencent, you must think of, number one, practically everyone that is alive in China is a customer. So that's a billion people. And those customers are then scaled on Chinese Facebook, mobile payments, games, other digital content, browsers, now investing in the cloud, and many other businesses that are owned. And a better representation here is social networks, 20%, domestic games, 20%, international games, 9%, online advertising, and fintech and business services, 32%. So, profitable business. And if I look at the numbers, I have here made a clarification between net income and earnings before taxes, excluding unusual items. Over the last years, Tencent has been selling stakes in JD, Meituan, etc., and therefore the net profit is higher than actually what the business does as operating profits. So therefore I have cancelled the valuation there, the profits there, and we have to take these profits, in this case 74 billion, but if I look at the last 12 months column here, 113 billion renminbi, stable, growing, and we can take an average, or we can even take this as an average profitability for the company. Plus, if you look at the business, there is still, after selling things, about 110 billion of US dollars, of 800 billion of renminbi of listed businesses and unlisted investee companies where you have less than 50%. I've made a few calculations just to see, okay, the market capitalization, 2.84 trillion, 2.65 trillion renminbi, or $363 billion is the market capitalization. Now, if we make a valuation and we say they are making 113 billion renminbi, we deduct the 800 billion of listed assets values, we have 113 billion of earnings on 1.85 trillion. So the P ratio of Tencent is around 16. And that is an okay P ratio, but that P ratio of 16 depends on the growth that Tencent will deliver in the future. There is a huge difference in valuation if the growth ahead will be 15% or 7%. Generalistically speaking, in these markets or in average markets, if a company grows 10% or more per year, P ratio 15-20. If a company grows 4, 5, 6%, then we are closer to a P ratio of 10. Where will Tencent be in the future? Only time will tell. But we can always check things a little bit. And again, I found this on Twitter. You can see the metaverse of Tencent is great. really a lot of connections and a lot of things they are trying to scale. They are now selling. There is China regulation, but they are also scaling globally. So even my Teachable platform that I use for my research platform is part of Tencent's metaverse, which I didn't even know. But Flipkart, India, a lot of things there. Now, of course, they have been selling a lot of things. Michuan and JD actually not selling, but giving shares to shareholders. And we'll see later that Prosus also has Michuan stocks now, distribute JD stake to shareholders, Michuan stake to shareholders, and now let's say P ratio 16, you own the metaverse in China, scaling globally, many other businesses, and we can expect, let's say, growth in line with double the economic growth. Then we could say that Tencent, for what it offers, is, let's say, fairly valued, a good investment out there that gives you that kind of ownership, and you can own it through a Dutch entity that lowers the risk of owning Chinese assets directly. That's also something to keep in mind. Plus you get the discount. So by buying Prosus 40% discount, you get Tencent plus the growth at a P ratio of 10, which is not a bad P ratio. But that's owning Tencent. You have to see how it fits your portfolio. It's metaverse, cloud, growth, a lot of activities. But yes, they have that 1 billion people, and then they can scale on that metaverse, which is the power of Tencent. Plus, they're always investing, building, growing, being ahead of the competition and the rest, payment systems, whatever. Depends also on regulation. Now the regulation chat has subdued compared to 2021, but it's still there. And then we come to investing. P ratio relatively low, but the question is again, will ever the discount close? It might be closing. At the end, as an investor, you're always focusing on getting more and more value. You're getting Tencent cheaper. When there is the next China boom, Prosus, even without closing the discount, will follow. So that's also a way to get a good return on investment. But there is more when it comes to Prosus. There are other unlisted assets, food delivery, classifieds, payments, fintech, 125 billion of total value, so 20% is not Tencent but something else. But if you go to the page here of Prosus, there is also something else when you invest in the company. Listed assets, 100 billion, most of that is Tencent, with others just a little bit there. Food delivery, and that is unlisted, where they tell you what the value is, but we can say that about, what is this, 75% of it is Tencent. And now the question is, what is the value of these other businesses out there? Are they really valued 23 billion or not? And I've looked a little bit at their strategies, and I'm telling you immediately, those businesses, all of them, are not profitable. Their hope is to get to 2025 profitability. But when you look at those businesses, iFood, classified adverts for cars, PayU, fintech, stock overflow, good habits, these businesses, wish it or not, are not Tencent. Tencent is a dominant force in China. iFood is working in a highly competitive environment without being the dominant force, without having the scaling capabilities of Tencent. We can't even compare it to what it is. Tencent is at a P ratio of 16:10. iFood is losing money, but they still think it's worth 23 billion, so I'm sorry, I don't buy it. Because if they go on a fire sale, it will be worth 10, 5, depending also on the market. Let's discuss the market. They say everything is growing great, but they are still losing money. They have lost a lot of money, a little bit improving here, but I think they are still far from making money. Plus, when it comes to valuations of these businesses, the public markets have really crashed, and this is a very, very interesting chart. So total funding per month for venture capitalists went from 80 billion in the ARK Cathy Wood crazy mania to 30 billion. Many more businesses are now competing just to survive for that money. It's a different game. And you can see number of funding rounds per month has fallen to 10 compared to 70 just 2 years ago. That's the craziness of the business. And they keep investing 2.2 billion, 2.4 billion in those companies, using their billions that they get from selling to repurchase their stock, and then also investing in these businesses that we don't know, except for the growth, what will be the value there. So I wouldn't give a valuation of 25 billion to those unlisted businesses. I've been reading a long time about it, but there is also the tax issue. Of course, if you look at the income statement, paid taxes are very, very little. There is something that until a certain point prevents them from paying taxes, but I think at some point there comes the tax game also. So 20% or that, or on dividends, plus let's say that that's the other businesses are not 25 billion but 10 or 5, depending on how that goes. That's also another 10%, and then you have a 30% discount. Then you have to wait for that discount to close over time. So of course with a higher interest return requirement, and there you might have the 40% discount explanation. And you never know. I have closed the coverage of Tencent on my research platform because it's impossible to know when it will close. I prefer other kind of investments, let's say more tangible. But if Tencent fits your portfolio of owning China, the metaverse there, scaling globally, one way of doing that can be through Prosus, follow the discount to NAV, buy a little bit more when it is larger, sell a little bit when it is smaller, and you own Tencent through a cheaper vehicle. But whether it is really that cheaper, maybe a 20-25% discount should be, let's say, fairly valued. 40% is a little bit higher, but the discount is there also for a reason. With buybacks they might close it, but then there is also the other businesses investing where the billions go in without knowing whether billions will come out. Thanks for watching, don't forget to check my research platform, and I'll see you in the next video.